A solid chart of accounts is the foundation bedrock for any sort of ERP implementation. But what exactly is a chart of accounts and how does it relate to our transformation? That's what I want to talk about here today. My name is Eric Kimberling. I'm the CEO of Third Stage Consulting. We're an independent consulting firm that helps clients throughout the world with their digital transformation and ERP implementation journeys. And when we're helping clients through their digital transformations, we oftentimes work with the accounting and finance department to help them establish their chart of accounts and use that as sort of the driver for how they're going to manage data, manage and track financial information, and ultimately report on financial results as part of their technology initiative. But what exactly is a chart of accounts and how do we factor that into our ERP implementation? That's what I want to talk about throughout this video. And if you're interested in learning more about this and other best practices related to digital transformations, I encourage you to read our book called Lessons from 1,000 ERP Implementations. And it's a book I wrote that you can download for free by scanning the QR code right here in front of you, or you can go to the links in the description field below. Before we dive too far into today's content, I want to share a little bit of information about Third Stage Consulting and who we are. Third Stage Consulting Group is an independent technology agnostic provider of consulting services to help clients through their digital transformations. We help with digital strategy and software selection, as well as implementation planning. And during implementation, we provide services related to program management, organizational change, business process improvement, as well as enterprise architecture. These are just some of the services we provide. We have offices in North America as well as Europe and Asia Pacific. So if you'd like to learn more, I encourage you to check out our resource center, which includes a number of resources that will help you through your digital transformation, and you can access that for free using the QR code here or the links below. You can also reach out to me directly if you'd like to discuss your digital transformation and brainstorm ideas on how to improve where you're headed on your journey. Now let's jump back into today's content. First, it helps to understand what exactly a chart of accounts is. And the best way to think of a chart of accounts is the different accounts that are used to categorize different profit, loss, and balance sheet items. So for example, if I work for an organization and I go buy something and I expense it to the company and I charge it to marketing, I might have a chart of account line item called marketing. And against that chart of account line item called marketing, I'm going to track my expenses. I might track my income if there's income affiliated with it. And I might also tie that to my balance sheet. And the hierarchy of how we structure our profit and loss statement and our balance sheet, basically all the line items you see on both of those financial reports, those are sort of the starting points for a chart of accounts. And the reason this is so important is because this is how organizations categorize different income and expenses, assets and liabilities in their P&L statements or their income statements and their balance sheets. And it's also the way we report on the financial health of the organization. It's also oftentimes the way that we track analytics and try to predict and forecast what's going to happen in the future. So having that chart of accounts in place and having a structured chart of accounts is very important for any organization, especially as you're going through a digital transformation or ERP implementation, because you have to have that chart of accounts defined and organized in your new system to be able to track that information I talked about. And one of the tricky parts of chart of accounts is that oftentimes organizations grow organically and they also go out and acquire other organizations, and they end up with either a hodgepodge of different charts of accounts for different parts of the business, and then the accounting department now has to map and consolidate all those different chart of accounts into one consolidated set of reports, which can be very time consuming and prone to error. And the other part of it is if you've just grown organically and over time just simply added new accounts in a hodgepodge, haphazard kind of way, you're going to end up with a really messy chart of accounts that doesn't reflect what executives want to see and how they want to report on their financial results. So for that reason, when organizations are going through implementations of new technologies, they take it as an opportunity to consolidate, validate, and clean up their chart of accounts. And that's what I want to talk about in the next section of this video. So now the question becomes, how do we address this whole chart of account concept during an ERP implementation or digital transformation? To put it simply, I would say you want to start your definition of a new chart of accounts as early as possible in your transformation. You don't necessarily need to evaluate and pick a new system. You certainly don't need to wait until you implement a new system to start defining what that chart of accounts is. And the reason why you want to start this concept earlier than you might intuitively think is because a lot of times it just takes a lot of time to go through this process and get alignment and agreement on what that future state chart of accounts is going to be. Especially if you've grown through haphazardly adding new accounts, or you've gone through a lot of merger and acquisition activity, and now you've got multiple charts of accounts. That's just a messy process to have to go clean up and try to figure out how we're going to consolidate this into one common set of a chart of accounts. So as you're going through your digital transformation, even as you're evaluating and selecting potential technologies, you want to, in parallel, also be defining what is that chart of accounts going to look like in the future? What kind of reports do we expect to see out of it, et cetera? And also you want to be looking at how we handle our period end close, which is what happens at the end of each month, each quarter, each fiscal year, where accountants and finance people will basically close out the period and present a consolidated final set of authorized financial results. And so you can start to see how chart of accounts is so important to an implementation and why you want to take the time up front to make sure you get that chart of accounts right, because if you rush it, what's going to end up happening is you'll end up just automating and putting into the new system that old chart of accounts that probably isn't working the way you wanted it to in the first place. So this is a real lost opportunity to make the chart of accounts better and to provide better, more streamlined reporting. And so that's the reason why you want to start on your chart of accounts as early as possible during the upfront planning and blueprint phase of your digital transformation or ERP implementation. So we also have to look at how the chart of accounts affects our business intelligence or our BI and our overall financial reporting. So business intelligence is sort of a fancy word for financial reports on steroids. BI goes beyond just basic profit and loss statements and balance sheet statements, provides other analytics and data about the inner workings of the organization, and oftentimes those inner workings are driven by the chart of accounts. And so when we define our chart of accounts, we don't want to just do it from a pure accounting perspective in terms of how we track certain information. We also have to look at the end result. What is it we want the report to look like at the end of the day? And then we sort of back into what sort of chart of accounts structure will support that future state business intelligence or reporting set of capabilities. So rather than just focusing on the accounting, the tracking of information, we also want to look at what the output is. And that's why looking at and defining what your future state BI and reporting needs are so important, because that is and should influence the way you structure your chart of accounts. Finally, but certainly not least importantly, we also have to look at how defining a new chart of accounts affects our accounting department. So it's one thing to define a new set of chart of accounts that's streamlined, consolidated, consistent across the entire organization, supports consolidated financial results. But now we have to go well beyond just moving that data and that chart of accounts into the new system. We have to actually start training people and getting the accounting and finance departments comfortable with how that data should be structured and how that chart of accounts looks. And it's not just your accounting and finance department, even though they are the ones that are most affected by your chart of accounts. It's also other people throughout the organization that somehow influence or affect or impact how data is tracked and captured in the new system. So if you have a new chart of accounts, chances are pretty high it's going to affect a lot of people even outside of finance and accounting, because now they have to categorize income line items or expense line items different when they report on their own individual expense reports or their own individual P&L, profit and loss statements for their individual part of the business. All those people that are involved in tracking and providing reporting on all that information that feeds up into accounting, they are going to be affected as well. So defining a new chart of accounts has pretty significant change management and people implications as well, in addition to impacts to accounting and finance technically, as well as in addition to the technology that's being deployed as well. So I hope this has given you a sense of what the chart of accounts is in the world of digital transformation and accounting, but also how it fits into how your digital transformation will look in the future, as well as how your ERP implementation might look in the future. And again, if you'd like to learn more about this and other best practices related to ERP implementations, I encourage you to read our ebook off our website called Lessons from 1,000 ERP Implementations. You can read that for free by scanning the QR code right here, or you can use the links in the description field below. So I hope you found this information useful, and I hope you have a great day.